Down at the bottom, I told you, we were bottoming. Why? Because we have a corrective move. The bears needed a 5-leg push down. Everybody's saying we're going to crash. What did I tell you? We're bottomed. All the day of the bottom with the hollow red candlestick, we hit horizontal support, the rising trend line above our 200-week moving average. Predicted we go up to this 200 in the daily and blow past it and eventually go make new highs. See, we've done that. The divergence right here with this peak only gave us a pullback. The RSI didn't even break 50. It's been above 50 the entire time. My signals have been bullish all the way up. Momentum flipped for 2 days right there, and it flipped right back to bullish when we gapped higher. Futures had moved higher. I told you if I was going to be wrong about the new highs, we get a lower high, get a pullback first. I was still predicting we get new highs. I told you I could be wrong if my signals began to turn bearish. My signals did not turn bearish. Momentum, after 2 days, flipped back to bullish. I told you the advance is going to resume, which it did. I told you at that time it looked like that because of that advance resuming and my momentum signals flipping back to bullish that I was going to be right about the new all-time highs. Turns out I was, which I predicted down here because of this being corrective and hitting key support and everybody predicting a crash. Now the same people that were, the bears are telling us, oh, that told us this rally was never going to happen. Oh, now we're going to get this crash. Now we're going to get the crash. Again, this move is likely not done yet. We're completing the blow-off top. I told you down here, we're going to get a powerful rally, go make new highs, and likely move towards the monthly or the weekly trend lines to get the blow-off top, which I think we're doing. Everything I've told you about the tariffs has been correct. The tariffs I told you were going to create a bottom. The tariffs that we're going to get next week are going to be associated with the top. We get the RSI at a reading of 76.21 on Friday. That's signaling caution. You have a possible Class B divergence where you have almost these two equal levels. This is 75 and some change. This is 76, or almost two equal. This one's just slightly higher. Maybe we go even a little bit higher if we reach the upper boundary. Again, I have not yet called a top. Great Scott, did you hear what I said? I have not yet called a top. Speculating on a bigger pullback, closing my long positions because I have massive gains. We've rallied up, 32% now. So a sell-off is going to eventually happen. I don't want to have to get all emotional. Counting that, I choose just to take my profits. I'm happy with the gains that I've made catching the majority of this move. I only went out when momentum turned right here, when we dropped below the 10-period moving average, got right back in. Told you I would. Now I'm closing my positions this past week. In the trade there with that black candlestick on Thursday, we're getting close to my target levels here in forming a divergence on the 60-minute chart. And we're at this extreme reading here at 76. We're going to see a rug pull at some point here. Everything I've said to you about the tariffs has created this rally. Tariff launch date was marking the bottom as I correctly predicted would happen. The week before I told you that would happen. We saw market breadth indicators at extreme readings. We saw the fear greed index at readings of 3, 4, and 5. Now we see fear greed index at extremes forming negative divergence, which you'll see in this video. Again, I could be wrong in prematurely trying to short the market, but I have the luxury of doing that because I have a massive gain. Short on Thursday, got stopped out. I had a tight stop in. Put out another short line near the highs there. Friday with the divergence on the 15-minute chart and the 60-minute chart, as I talked about in my last update. If you didn't watch that video, you missed it. Go watch it. Those are the signals that I'm playing. You do what you want. I'm not recommending anybody buy or sell anything. I'd rather be a little bit early getting out than a little bit late. That's why I've closed all my long positions, because I was right. Yes, I'm looking for a top. Yes, I predicted new all-time high, and I was correct. And I told you, getting above this black dotted line, that again, I was looking to see, would we turn off at this level? Would we build upon this and build upon the awesome oscillator divergence that I've talked about constantly in nearly every single video? Well, that divergence is now formed, likely about to play out. So you do what you want. I predicted new highs. I was correct. My signals, which are correct, remain bullish. We see these divergences play out that I've been talking about on the intraday charts and the extremes here, maybe this Class B divergence here. Divergence I've been talking about on the MACD and other indicators, those signals are now coming to a conclusion. But as I talked about, they may take time to develop. Talked about with the awesome oscillator and the MACD. Again, let me just say, we still may go up to this upper boundary right here. We still may go higher, end up seeing a topping tail or something like that, a shooting star candlestick or a doji. I think this is going to come to a conclusion. So again, I may end up being stopped out and still have to reset my short at higher levels. That's fine. Trying to be disciplined. The bears are telling us, oh, we're going to crash right now. Same people that told us we were going to crash at the bottom. Herd was going, yeah. And now the herd saying there's no way we're going down. Here they didn't believe we could go up, and now they don't believe we can go down. This is what the herd does. Could I be a little early in selling my long position? Maybe. I have a massive gain. Speculate on this possible pullback, and I think we're going to get one more push higher. You see that going into September or October maybe. Talked to you about the seasonality, and I told you again on January 3rd when we hit this level and we were going sideways, I said the seasonality still may play out as we move into the end of the month. It may not. It doesn't always play out. Many times it does, and that's why I told you this may drag out into the end of the month if our seasonality plays out. I've shown you the seasonality chart over and over again. I'll show you again right now. Here it is. Again, I've talked about it. Again, at the low in June, we went up to the July 3rd high and we went sideways. Here, we kept going and going with the seasonality into the end of the month. And just this last week, we broke out of that sideways trading range as you just saw on the chart. So again, I told you the seasonality may be right. But again, it's predicting that we'll get a sell-off for a few weeks on into August and then a bottom in August and a rally on into September where we'll have more volatility. Know that this end of the year rally is going to be correct. If we pull back and go higher to complete the blow off top, we could see a peak in the market by September or October, possibly, if complete the 5-leg push higher. After going sideways, we had an up week this week, and again, you can see here going into July, the end of July, our seasonality. Here we had a peak and then a pullback kind of going sideways and then another peak here with the seasonality. Well, with the stock market, we rallied into July 3rd, rallied from mid-June, halted July 3rd, went sideways, and then this last week we had this big push higher. We did get that topping tail. Told you, again, candlestick was not confirmed, and we negated that with our rally on Wednesday. Black candlestick on Thursday, and then the rally continued on Friday. So if we remain bullish, we still may go higher. Seasonality is playing out, but we did go sideways there for a few weeks. Rather than getting that big push up in July, it had already happened prior to going into July and continuing here in the latter part of July. So again, seasonality suggesting we're going to have an August sell-off, probably going to be correct. My last video, I talked about the Bollinger Band, that we're tagging that upper Bollinger Band. Down over here on July 3rd, I told you when we were going sideways that when we closed back below it, we could go back up and reach that upper Bollinger Band. We talked about this at great length and detail, just like what we did over here. Went sideways. You know, we had a little bit of a sell-off, went kind of sideways, and then we went up and tagged that upper band. Tagged it over here in January, tagged it over here in December. Sometimes you get a push sharply above it. We could reach the upper boundary of the rising wedge, or other times you get rejection surrounding it. I talked about this in my last update in great length and detail. Which is this? We'll find out. The Fed, we have earnings, and we've got Trump's tariffs launching. The narrative is that Trump's not going to go through with it. Trump's going to chicken out, and the tariffs are going to be paused. I'm telling you, we're either going to have tariffs or we're going to have deals. The market is complacent surrounding this issue. The tariffs are going to remain if we don't have deals in place. We've had deals announced. Maybe we get more deals. Maybe that gives us a rally. But I'm just telling you, very good chance that date is not going to change. Told you the other tariff date, 9th, would be associated with the bottom. This tariff date is going to be associated with the top. I keep saying it. But you got people over there, no, it's going to happen. Keep your eye on these Bollinger Bands. We tagged it on Thursday, and again, this is one of the reasons why I closed my long positions. I told you we come up to this level. Maybe we go past it, hit the upper boundary. I talked about that possibility. Seasonality is likely going to continue to play out, and we'll probably see a July peak and a sell-off. We've seen a July peak in 2024, in 2023. You're likely going to see it here in 2025. If the charts and indicators have helped you, consider supporting the channel today. My indicators have really helped me. I hope they help you. You'll see them in this video. Find that information useful, please consider supporting the channel. Follow the link below to take you to a secured site. You can donate any amount you want. Just ask that you do that rather than getting sponsors and selling you stuff. I don't want to do that. They contact me all the time and I turn those offers down. I don't want to do it. Most YouTube channels make their money. I'd rather just share my charts with you. Just ask that you do what you can to help out. So please consider doing that today. It takes a lot of time and effort to do this. And if you want to see my amazing signals, watch the video all the way through. About this divergence over and over. And back over here, when we had this divergence in June right here, I told you momentum had flipped bearish, but my trend signals were still bullish. And I told you if we flip right back to bullish, we're going to be right about the new highs, the new all-time high. If we see the momentum remain bearish, flip my trend signals bearish, then I'm going to be wrong about the new all-time highs, and we'll get the pullback first. I told you back then to be watching to see if we get green bars here and get this larger divergence developing. We did get the green bars. Up here, when we resumed the advance, we gapped higher, we got green. Do you see the blue bars? Do you see the green cloud? That's bullish. Momentum flipped, but the trend signals did not, and momentum is still bullish. Do you see this? And we started going sideways after the July 3rd peak. We started going sideways, a consolidation. We got red, and I told you to be watching. Do we get another divergence in the most recent price action on the RSI, on the Awesome Oscillator, and here on the MACD? Again, one of the quirks about the MACD, it rolled over, but one of the quirks about the MACD is sometimes you correct sideways, which is what we've talked about. And I've talked about these divergences at great length and detail nearly every single video. Now they're coming to a conclusion. Next week I'm going to be watching. Do we get red bars? We have earnings, we have the Fed, we have Trump's tariffs. Go higher and hit that upper boundary of the rising wedge or topping. We very well could. I have not yet called a top. My signals, which are correct, still remain bullish. I am playing some divergences myself. And as I've said, I could be premature in speculating with those divergences. Fine, I could just reset my trade. I'm being very disciplined. I have a massive gain. Again, I think that these divergences are going to eventually play out here. I've warned you about them over and over and over again to be watching for these divergences. I told you if the seasonality played out again, might get a divergence in the most recent price action on the MACD, the Awesome Oscillator, and the RSI. If the divergences are to play out, we got to flip the cloud back to red. We got to take out the 10 period, the red line there. We got to flip the bars back to red. So you're going to get a pretty good drop by the time momentum flips. And when we begin to see it flip, it could be pretty violent. It could be a pretty dramatic move. The stochastic, the VIX is forming bullish divergences, as I've been talking about, shown you here over the weekend. It's likely going to play out very soon. Talked about the same divergences with NASDAQ. Again, MACD is forming this massive divergence, but it's rolled over, and again, we went sideways, and then now we're pushing higher. This past week, we're pushing higher, inching out of that trading range. Late the previous week, S&P more so this last week. Again, the same thing, the multiple point divergence. I've talked about this back in June. I talked about this back over here in July. See that my signals remain bullish. I've talked about these divergences developing. I told you to be watching for it. I told you with signals, momentum flipping back to bullish here, that I was going to be right about the new highs. I am. I'm going to be right about a pullback. I have not yet called a top. I have not yet had my signals, which are correct, turn bearish yet. Because my signals have been bullish, that's why I have been bullish. When we move to new all-time highs, I told you I'm starting to look for a top because at some point we're going to pull back. I don't know the day or the hour we're going to pull back, but I told you we were going to go make new highs and we're going to pull back. And I think the advance is going to resume and we're going to go even higher. Great Scott, did you hear what I said? Going to go even higher. At the bottom, when I called the day of the bottom and called for new all-time highs, you don't hear that. You're not hearing a word I'm saying. If right here you say if you hear me say that we're about to have this massive crash, go take out this low, you're not listening to a word I'm saying. I'm saying we're going to have a correction, and then we're going to go make new highs, and we're going to go towards 65 or 60, 65 to 6,700 or so. That's where the trend line's coming in the weekly time frame. That's where I think we're eventually headed. Again, hear me say blow off top and go to new highs to be followed by a bear market and a crash, and you don't hear the blow off top and the new highs. You just hear the bear market and a crash. There's nothing I can do for you. You're picking and choosing what you want to hear. Again, a blow off top, new all-time highs, later a completion of the bull market, a top followed by a crash, and likely we'll get jumbo rate cuts out of the Fed when they begin to panic. That's what's happened in the past. And right now, yeah, I'm expecting a sell-off. If you hear me say, oh, we're going to crash and come down and take out this low, you're not listening to what I'm saying. You know, all the way up, the bears on us, oh, this is a bear market rally, and I told you they were going to be wrong and that we were going to go make new highs. I was right about that. I had people tell me all the way up, oh, you're wrong, this is a bear market rally. And again, I was proven right. I was right to be bullish. I was right to predict new highs. I was correct about the bottom. I got the same people. The herds tell me, oh, there's no way the market's going to go down. Bears are telling me, oh, no, we're going to have this massive crash now. It's over. This is the top. I told you we were going to go up here, and they're going to tell us double top or triple top based on the December and the February high for the NASDAQ, the S&P 500. What they're doing. I'm going to be correct again. I think we'll get some kind of sell-off, maybe a shallow retracement, maybe a deeper retracement to the 200 or beyond it. And I think we're going to resume the advance. And again, the seasonality will probably be correct. I was right about the rally. I was right about the bottom. I was right about the new all-time highs. And I'm going to be right about the pullback. But if you believe that I'm saying the bull market is over here, you're not listening to what I'm saying. We're still in the blow-off top phase. Did you hear what I just said? I got to say this because, again, some people, they only hear what they want to hear. It's very frustrating. My signals have really helped me. They're going to tell me when the turn happens. They're still bullish. You'll see them in this video. Seeing them right here, right now. So there you have it. The S&P 500 is testing its upper Bollinger Band, as I'm going to be talking about in this video. We have divergences that are forming. Market breadth indicators with the fear greed index. We're just dropping back below extreme greed, back at greed at 74. And as the S&P is making a new high, we're getting a lower high on the fear greed index diverging. Oftentimes you reach an extreme and you form a top or bottom. Other times you form a divergence. Right now we're forming a divergence. The fear greed index is making a lower high and the S&P 500 has made a higher high, and often it's associated with the turning point. We're doing this as we're hitting that upper Bollinger Band. We're closing just above it. Hit above it on Thursday, and then we turned down off of it with the topping tip. That candle was negated today with the close above the upper band. We may not reach it to the upper boundary of the rising wedge if this divergence plays out here in the fear greed index. We still might try to see the Dow close above 45,074. And again, it is diverging with the transports. That's not moving up near the highs if we do push up to a new intraday high. This is a weekly chart right here. We did do it ever so slightly on a closing basis. Still may push above the intraday high of 45,074. That was the peak in late 2024, and then we got another peak at that same level, 45,000 area. So watching that, could be the Dow goes higher without the rest of the market. If the Dow does go higher and the S&P can go higher and the NASDAQ, we can reach those upper boundaries of the rising wedges. On the put to call ratio, I have here the 5-day moving average. We're getting in red and then the raw data behind it. We're getting a divergence very similar to what we had at the February top, where we had a higher low in February with the 5-day moving average of the put to call ratio. And that really marked the top, and it was followed by this sell-off. Now I think we're going to get a pullback. I don't think we're going to get a 21% sell-off like we had over here. But again, I think we will get a pullback for wave 4 and then go higher. This could be suggesting that the put-to-call ratio is a contrarian indicator. Recently, option traders have been overdosing on calls. They should be considering puts, which are short positions. S&P is moving to a new high. Stocks above their 50-day moving average on the S&P, making a lower high at 73%. We had moved up to the 80% level. We're forming a divergence similar to the divergence that's forming on the Fear Greed Index. Again, we're probably going to pull back, and this will probably end up being a much larger divergence once we get the peak, much like what we had over here. When we got the February top, we'll probably see something similar to that develop in the coming months ahead. Similar situation with stocks above their 20-day moving average. Again, a series of lower highs as we form this massive divergence on stocks above their 20-day moving average on the S&P 500. Went sideways after the July 3rd peak and then now drifting higher. The upper Bollinger Band performing this divergence here in the more recent price action, building upon it from back over here. Multiple point divergence. It was down at single digits. I told you we were bottoming in April. Everybody was calling for a crash. That's how I knew we were bottoming. One of the reasons how I knew. The Fear Greed Index at that time at readings of 3, 4, and 5 at week of the launch of the tariffs. I told you we're going to be paused, reduced, or both. In fact, it happened. Those tariffs were associated with the bottom. These tariffs on August 1st are going to be associated with the top. Sign yesterday of a possible top, but I told you that signal could be canceled out if we negated the candlestick that we had, the little topping tail there breaking above that level, and it negated that signal. We had these other warning signs. We got just a little pullback, but it's warning, hey, be on the lookout for a possible peak. The Thursday bar, the Thursday circle there for that bar, it did get canceled out. I'll be watching to see if another one shows up. Again, I programmed it to where we might see momentum begin to wane and move in the other direction. Tell me if it's going to be a reversal or a pullback, but it does tell me where we have a place of a possible shift in momentum, but I've programmed it to cancel out the signal if momentum begins to turn back up in the other direction. And that's what we had happen today. So it canceled the signal out. Watching. Remember, my signals remain bullish, but I'm just warning you, once we get a peak, we could see a big turn down, something that looks like this, a candle that looks like this, a big turn, or a little bit of a smaller one here. We could see a reversal bar begin to set up if we, in fact, peak sooner rather than later, or go up to the upper boundary of the rising wedge and then begin to turn. Signals remain bullish. No guarantee, but we might get a reversal bar when we get a peak. It doesn't always show up, and signals have been bullish. We don't have a reversal bar here. It may or may not show up. Signals remain bullish. Still bullish. We're testing that upper Bollinger Band. Going to see if we get a topping signal surrounding it, or after moving off of it, we could see a possible topping signal. We had one over here just before the top. We had no topping signal here in early July when we got the July 3rd peak before we started going sideways. Now we're drifting higher. We'll see if we get one here. My signals remain bullish. Risk models forming a divergence in the more recent price action, the larger divergence as well. We still have the trend bullish, but I do think the upside potential is limited after a 31% move higher. Signals remain bullish. We'll see if that changes going into big earnings next week, going into the Fed, going into Trump's launch of his new tariff rates come Friday on August 1st. Watching a video closely, I told you that we could be topping around this trend line right here. I think that is likely. And with the sell-off we had at the trend line there, I told you I was looking for either a lower high or a higher high. If we were to form this divergence on the RSI, we get a higher high. Actually, I think a larger divergence will develop. I think we'll sell off towards the 200 period moving average or just above it, and then recover back up for another test of this trend line or just overthrowing it where we have a major long-term trend line in the weekly time frame that I've been talking about. Watching the trend line here for a very long time with the highs back over here in 2024, line excluding the shadow in 2025, Again, testing and then going above it and hitting this trend line. So again, I think this is a broadening formation that is going to end up completing a topping process on Nvidia and eventually likely the blueprint for the stock market. I think Nvidia is going to top out here, pull back. I think the stock market will do the same thing. Nvidia is up over 103% since I called the day of the bottom for Nvidia. We had a 9 count there. We hit major support. I talked about this at the bottom, and that's one reason why I thought we had bottomed April 7th with the S&P 500 and NASDAQ. I told you back then, Nvidia was either going to merge with the market and get a lower high for a head and shoulders pattern, or it could get this massive, massive broadening formation into that trend line. 2 weeks ago, I laid out my case why I believe that a trend extension above long-term channel in the weekly time frame is less likely and that the broadening formation is more likely, and I talked about that 2 weeks ago. I think this is more likely the case for wrapping up primary wave 3 and probably going to pull back for primary wave 4 and then primary wave 5 to complete the cycle top. The MACD has moved to a new high, but we still have the divergence here on the price oscillator. If we end up overthrowing this level, we have a trend line in the long-term weekly time frame just directly above this trend line. Turn off of this trend line with this divergence that is now forming, then again we'll be watching to see if we get the pullback towards the 200, eventually complete the blow off top here. Now we do have a divergence on Nvidia because it made a new closing high yesterday, and today we were just slightly down, getting a candle of indecision in the form of a doji. So there is a divergence right here after bouncing off the 10 period. We'll be watching this trend line. If we bust up through the trend line on the broadening formation that we just looked at, then again directly overhead. Let me just show you the broadening formation here one more time. Directly overhead is the long-term upper boundary of the channel in the weekly time frame here. So if we turn off this level, we can pull back and eventually try to go up to that upper boundary level. We may try to come closer to it right now, but you get a candle of indecision here in the form of a doji on the weekly chart for Nvidia. That very well could mark a turn for a pullback, but like I said, I still think we go higher if we start to pull back here. If we don't, if we just keep going, you got this trend line directly overhead. You've got the divergence now in the most recent price action on the RSI, the larger one on the price oscillator, so I'll be watching to see what becomes of that. But this broadening formation, again, I think will eventually produce a larger reversal and terminate the bull market for Nvidia and the stock market. I think it's the blueprint. If we had a fifth wave extension, we'd have to be able to clear this resistance area here. I talked about 2 weeks ago. I think that's less likely. I think it's more likely that this marks a top for Nvidia surrounding this channel. This is a broadening formation in the weekly time frame. If I zoom out, you can see the big channel. This is all the data we have with Nvidia, and I think that, again, this trend line right here, we just slightly breached it there, but I'm taking it from these lows, and then from this point right here, we went up and hit it here, and again, we could hit it again, and that broadening formation trend line is just directly underneath it. I think it's more likely we're going to see a top in this area, and then eventually try to come back down, take out the midpoint here, the dotted midpoint of the channel, eventually trying to move towards this lower boundary channel line for the bear market for Nvidia. I think it's completing the blow off top as I've talked about right now. There's a good chance we get a pullback here with the seasonality in August, and then we go on and maybe see the top complete September, October, later in the year, reaching this trend line with Nvidia and reaching some of the target levels I've talked about with the NASDAQ and the S&P.